Uganda hosts one of the world's largest population of refugees, with 1.5 million refugees currently residing in the country. The majority of these refugees are from South Sudan and other neighboring countries such as Somalia, Burundi, the Democratic Republic of Congo, Kenya, and Rwanda. With few financial service providers interested in the refugee segment, access to formal financial services was almost non-existent until recently. Refugees have had to rely on informal and semi-formal services for their financial needs. In 2019, the Financial Inclusion for Refugees Project FI4R was launched by Financial Sector Deepening Uganda and FSD Africa in collaboration with BFA Global to support 3 financial service providers: Equity Bank Uganda, Vision Fund Uganda, and Rural Financial Initiative, to offer financial services to refugees and host communities.
FI4R set out to reduce the vulnerabilities of these refugees using market actors.
We were looking at fragile communities and the realization that refugees continue to remain largely excluded from access to financial services, despite their economic activities that are taking place.
We decided to understand and focus on understanding how refugees' strategies in terms of financial inclusion, how they're earning income, how they're spending, but also what choices they're making as things happen in their lives.
Our journey started in 2018 when we did a baseline survey to basically understand how the refugees save money, how the refugees use money, and after that we were able to tailor a product which we name Savings Group Linkage Loan, specifically for the refugees in West Nile. The Savings Group Linkage Loan has become a household product, and it has become a cash cow actually for Vision Fund Uganda. And for that matter, we are looking at extending it to other areas in our branch network to help improve our impact. We are operating in the areas of Arua, Yumbe, Moyo, and Adjumani. And so far we are talking about over 20,000 clients that we are serving, over 700 groups, you know, because our approach is actually working with groups, the VSLAs. We are talking about over $500,000 in portfolio. We are talking about over 20,000 beneficiaries of our financial literacy interventions. We are talking about over 80,000 children who have benefited.
We were looking for a solution that would utilize our agency network so that our agents can be meaningful. And certainly this came as a solution to that, because we have used agents for purposes of taking financial services to the displaced persons, refugees in Uganda. So it has been quite a good journey. We have identified refugees can be banked, refugees can get credit, and we have designed products for them, not only now operational projects, but credit products. We have a group reading product for refugees, where they can borrow money as a group and be able to do their business and operate. They can access credit. We helped partners to be able to convert their assistance to cash. Currently, we have 50,000 refugees or households on the program, receiving aid using cash.
We are offering a product called SMILE, that is Saving, Mobilization and Innovative Lending Effort. And in that project, we were targeting like digitalizing the saving groups transactions. We were also looking at saving mobilizations from the saving groups, and also as well lending to the saving groups. We realized a high turnout than when we expected. We also realized that refugees can actually take loans and service it better than some of the host community members. We plan to continue with the SMILE project, and we want to keep it as a stepping stone. Then we also plan to continue digitalizing these people to become more technical in their operations.
We've seen over the past 2 years that refugees have received credits from a number of financial service providers after being given enough financial literacy and having built their capacity. And they've demonstrated that they are able to repay their loans, they're able to invest the monies given them into income generating activities, and they're able to use the monies intelligently to weather financial shocks, a clear case being COVID.
We've got insurmountable value from dealing with the refugees, giving them money. First of all, it's a mission accomplished for us. It's within our mission to impact communities positively. It has built our brand. It has transformed communities.
I have seen within the last 2 years, people who are just normal small micro business persons growing into SME, being able to double, triple their production.
The lessons we've learned in this whole project has been useful not only for FSDU and FSD Africa, but I think for any financial service provider who's thinking about providing services within especially East Africa.
Now it has proved to financial institutions that indeed you can set up shop and serve refugees profitably.
And this has shown that refugees are a bankable segment, that a lot of the risk that was shrouded in this space can actually be diffused away if you can take a very methodical approach, if you can choose the right model, and if you can build the capacity of refugees, they can be a viable and profitable segment. And so we feel that it's a model that can be easily transplanted elsewhere. It's easy to set up it up such that the market actors take the lead, and then the development actors support from behind.